evening. It's Brian Paragamian, Senior Trader and Co-Founder of ProfessionalStockTraderLive.com, bringing you Friday evening's technical analysis update. And I guess nobody can really be surprised at the market's behavior today. The stock market gapped down, traded down as low as 7,033. You can see here we closed at 7,062. The lows were made early on in the day, and pretty much the reason for this decline, so they're saying, is the fact that Citi and the government, Citibank and the government struck a deal where the government would own up to 36% of Citi. Now, of course, this has been really out in the public, and I don't think it should be any real news, but it certainly looks like they're selling on any reason to sell these days now. Stock market closing down 119 points. It's broken key support levels at the 741 area on the S&P cash, closing at 735. I thought at one point today that they may want to hold on to this level and maybe try and rally the market late, but who wants to be there over a weekend? Who wants to be there not knowing what the government's going to come out and say at any point over the weekend? It seems like every time Washington comes and talks, look what happens in the market. Anytime they get involved on anything, we continue to have market falls, we continue to have uncertainty. Thus, the reason the stock market continues to fall. And now we are looking at sub 7,000 on the Dow coming here. Let's make no mistake that we are heading on our way down past 7,000. And I think the next spot we have to look at is around 6,500. And how much uglier can this get? But let's not talk about how bad things are. Let's talk about opportunities that are out there. And one opportunity we're going to look at here tonight that we've talked about for a period is Dean Foods. Dean Foods is in a 7-month wedge formation here on the weeklies. It finally broke out, as you can see here on the weekly chart this week here, getting through its 50-week moving average, this white line. But again, this is one that we think you can hide in. They're looking at a 20% earnings growth compared to 2008. They're looking at earning $1.50 plus. This is reported by the company as opposed to consensus of $1.49, which is a 20% growth rate. Last quarter they came out with better than expected earnings as well. They're giving upward guidance for the first quarter. So this is a stock we think you can hide in. We think you can look at trading on any dips in the stock. We think the stock is positioned to move higher, and the stock is trading accordingly. And if we even go ahead and take a look at it here on a daily chart, and let me switch over here to the daily charts on it. If we take a look at it here on the daily chart, you can see here as well that now it's above its 200-day moving average. This red line here, it's now above its 200-day moving average. We got actually a breakout above the downtrend line here going back a couple days ago, a significant breakout, as you can see, very clear breakout above the downtrend line. We got today the confirmation breakout this week over the weekly downtrend line. So this is a stock I think can continue to be bought on all weakness. The next price target on the stock will be somewhere up in this 24 to 25 area. The stock closing today at $20.45 as we type it in right here, so you can see 20.45 close up 40 cents. Stock market down. This stock has performed well here over the past 2 weeks, with the stock market continuing to be pressured. So again, we're trying to bring you some great ideas where the company's given upward guidance, and we think you ought to really take a look at hiding in some of these spots as an investment, because you can't beat the fact that the companies themselves are giving upward guidance. They know what's going on in their companies, and these are the kind of stocks you want to be in. Let's talk about a couple of trading ideas now, and we're going to kind of go over one that we talked about yesterday. And let me pull the chart up from this area here. Visa today, again, as you can see here, 56.71, closing up 65 cents. I'll type it in over here. You can see up 65 cents. It's actually bid up right now in the aftermarket. Again, here's a stock that's breaking a downtrend line going back to June. So you're talking a 8-month downtrend line. It broke. I think the stock can be played continually from the long side until it shows me something different. The chart looks great. It's not overbought. Here's another one to put on your long side radar. The stock is acting well. And we're going to talk about one other one from the long side. Despite our belief that the market's heading lower, you know, there's going to be breakouts in stocks. There's going to be stocks that are still going to perform well. Here's another one that I absolutely love from the long side, and that is Transocean Limited, ticker symbol RIG. Here's another one. Despite oil being down 90 cents today, it managed to eke out a gain. A penny it was only, but nonetheless the stock is acting well. And you can see here that you kind of have a little bit of a formation here where you've got kind of a double top here up into the resistance zone here. I think once you start taking out the 62.5 to 63 area, the stock is positioned to move even further to the upside. And I know now, as you can see here, 59.77 close. So we're still talking, 2.5, 3 points away. But the way this stock moves, this can move up 3 points in a day. So I want to put this on your long side radar. And I thought I had talked about this last night, but I don't believe that I had. And I had actually talked about the gold stocks. And speaking of the gold stocks, AEM, that was one that I did talk about. The stock closed up 49.86, up 89 cents. I thought the stock was getting ready to rally. It did rally today. Despite gold being down, gold closed down a couple dollars on the day. Right now in the aftermarket, it's trading up $1.40. But really, I don't think gold is a trade. About 70% of the people that I talked to about this year still think gold is a trade to the long side, and that gold's eventually going to break out because of inflation and all the stories that I've heard. But the bottom line that I want to point out here again is if that was the perception, and first of all, if everyone believes that, then it can't be true. And secondly, I think the government of the United States knows that this is a problem. They can sterilize any type of currency or any type of money they're printing, the building of the currency, the U.S. dollar here. They can control how the effect is on the economy. And I think they know that. And I think the fact that you're seeing gold not breaking out to new highs, in fact, it's $60, $70 off its highs with the stock market trading down in its lows, I think the smart money knows that the problem, if anything, right now is deflation, not inflation. The smart money is going into T-bills, and the smart money knows deflation is a problem, and that's why I think you're starting to see a back off in gold. And I'll tell you what, if gold breaks $900 an ounce, you can kiss it goodbye. That it is an absolute trap in gold. Everyone that got trapped in it up at 1,000 is going to be saying to themselves, what did I do here? It's oil all over again, except it's going to be taking place in gold. So I'm actually hoping that there is some type of rally back up in gold, something meaningful up into the 970, 980 area to get more gold bugs involved, thinking it's going to break out, and then I'm going to lay into it and get short it. But I don't know if I'm going to be afforded that opportunity. But I don't have a whole lot else to say other than let's be on the lookout for a market to turn in here, even though I think in time and quite possibly Monday morning we drop below 7,000. But I think we are due a rally in here, and I think at some point Washington's going to figure it out and stop reporting stuff every single day in the news. I think at some point we're going to get a meaningful stock market rally, and I'd be on the look for it quite possibly to happen next week after we get some weakness early in the week. And then I think maybe towards the middle and latter part of the week, I think we might get ourselves and see the stock market rally in earnest. But again, let's not get too excited because I think the stock market's still in deep trouble. I think the economy has to get worse before it starts getting better. And without any real clear direction out of Washington, I think things are going to be tough here. But anyways, we're doing just great with the types of trading we're doing. We had a day trade today in RIG where we took $1.40 out of it. So we're doing okay trading. We're doing okay on our swing trades. So we can make money in any environment. So hang in there, everyone. Have yourselves a great weekend. We'll see you Monday morning at 8:20. Talk to you soon.